Imagine this. It's the final countdown to 2026, and Wall Street's whispering about a magical boost that could rocket stocks higher right when everyone needs it most. But hold up, what if I told you this so-called Santa Claus Rally might be more smoke and mirrors than holiday cheer? What if the big banks and hedge funds are hiding risks that could turn your portfolio into coal? Buckle up, folks, because today we're diving deep into whether the Santa Claus Rally will save stocks in 2025, or if it's just another Wall Street fairy tale designed to keep you buying while they cash out. Let's unpack this mystery step by step and reveal what the suits on the trading floor aren't telling you. First off, what the heck is this Santa Claus Rally anyway? Picture the stock market as a grumpy old Scrooge all year long, then suddenly turning jolly in the last week of December. Historically, it's defined as the last 5 trading days of the year, plus the first 2 of January. That's 7 magical days where the S&P 500 has climbed an average of 1.3% since 1950. That's right, over 75% of the time, stocks go up during this window. Why? Blame it on holiday bonuses flooding into mutual funds, tax loss, selling wrapping up, and traders going on vacation, leaving the market thinner and more prone to pops. It's like the market's own version of eggnog, sweet, seasonal, and sometimes a little too intoxicating. But here's where it gets juicy. Will it happen in 2025? The signs are screaming yes, but with a twist that could trip you up. And look at where we stand right now. December 22nd, 2025. The S&P 500's up about 15% for the year. Solid, but December's been a roller coaster. We dipped early in the month on AI bubble fears and tariff talks, but bam, last week, tech roared back. Nvidia's up 4%, Oracle surged 7% on that TikTok deal buzz, and the Nasdaq eked out a 0.4% weekly gain. Analysts are buzzing. Reuters says investors are hoping for year-end gains to cap a strong 2025. BNN Bloomberg points to cooling inflation at 2.7% in November, lifting stocks and rate cut bets. Even CNBC's asking if we'll pull off the coveted rally as the new year knocks. Think about it. Conditions are ripe. The Fed just slashed rates for the 3rd time this year, signaling easier money ahead. Big banks like Bank of America are hitting record highs, fueled by deregulation vibes under the new administration. Prediction markets are exploding, with DraftKings launching event contracts amid lighter rules. And don't forget the AI resurgence. Despite bubble worries, data center stocks are rebounding, and experts like those at Seeking Alpha say the S&P's poised for a rally on historical odds and positive catalysts. If history holds, starting Wednesday, December 24th, we could see that 1.3% average pop. That's not chump change. On a $10,000 portfolio, that's 130 easy money while you're sipping hot cocoa. But wait, before you hit buy on everything, let's pull back the curtain on what Wall Street isn't telling you. They're hyping the hype, but glossing over the landmines. First red flag, volatility's lurking like the Grinch. December 2025 is already down nearly 2% so far on the S&P, and thin holiday trading means any bad news could amplify drops. Remember triple witching last Friday? $7.1 trillion in contracts expired, spiking volume and swings. What if a surprise jobs report or PCE inflation data this week tanks sentiment? The core PCE drops Tuesday. If it's hotter than expected, poof, rate cut odds plummet from 77% for January. And tariffs? Oh boy, that's the elephant in the room. The Trump admin's pushing aggressive trade policies, which could jack up costs and slow growth. Martin Pelletier at Financial Post warns of significant medium-term risks, building portfolios to withstand stress, not chase rallies. Sure, stocks like financials and small caps are rotating in, but if China retaliates or supply chains snag, that Santa boost turns into a January hangover. X users are split. Some like Antonio Costa are asking if history repeats, while others point to Buffet's sell signal at 8.5 on their bull and bear indicator, hinting at a 2.4% drop over 3 months. Curious yet? Here's the real kicker. What if the rally happens, but it's a trap for retail investors like you? Wall Street pros know the stats. 76 to 79% positive since 1950, but they've got hedges in place. You? Probably not. They're rotating into undervalued plays. Think the 9S&P stocksinvesting.com flagged for a potential Christmas surge, trading below fair value. Names like those in materials and financials that could 2 times if the rally hits. But they're not shouting about the K-shaped economy, wealthy folks thriving, lower income strained per consumer sentiment data. Confidence rose slightly in December, but stays subdued. If spending tanks, no rally saves consumer stocks. Let's break it down with some hard numbers. Historical Santa rallies? Well, it's like 2018's minus 2.6% amid Fed hikes. For 2025, odds look good. Fed's hammock sees inflation near 3%, holding rates. But Williams hints at more easing. Goldman Sachs says the optimism phase continues into 2026. Yet Bloomberg's 6-chart recap shows 2025's wild ride, down in April, up double digits now, thanks to AI hype. The question is, can it sustain? Nasdaq's up 0.5% weekly, but AI, like Micron's plus 10% post-earnings, reassures demand, or is it just relief? Now, imagine you're at the trading desk. What's your play? If you're betting on Santa, load up on AI rebounders, Nvidia, Oracle, maybe even Trump Media after that TAE Fusion merger spike. Undervalued gems? Check those Canadian stocks Globe and Mail touted for outperformance in a rally. Large cap, liquid plays. But hedge your bets. Gold's edging lower but up weekly on inflation cools. Bitcoin's volatile but could ride lower rates. X chatter's hot. Nasdaq 724 says conditions look perfect with 77% historical positivity. But Sobro 555 warns sentiment's cautious, oscillating bull bear. Here's a thought that might blow your mind. What if the Santa Rally isn't about saving stocks? It's about saving face for Wall Street. 2025 has been solid, but a flat December hurts year-end bonuses. They're pumping the narrative to lure in retail money, propping up prices while quietly trimming positions. Kiwi.eu notes if the S&P hits plus 19%, it's 3 straight plus 20% years. Uptrend gold. But State Street's Michael Arone on YouTube warns of Trump deals and rally potential, yet bubble fears persist. Let's zoom out for a sec. Why does this matter to you? If Santa shows, your 401k gets a nice bump heading into 2026. But if not, January effect could hit hard, with tax gains realized and fresh selling. Analysts at Nasdaq say investors are about to see it, but temper with reality. Thin liquidity amplifies moves. IG's market navigator flags Fed easing strengthening, central banks diverging, U.S. indices near highs. Curiosity peaked? Good, because we're not done. What Wall Street really isn't telling. The AI bubble's real, but camouflaged. Valuation concerns are everywhere. Seeking Alpha says, here's why it's likely, but fears persist. Rotate into quality. Deep value moats like NVDA, still below fair value, debatable, or AMZN. And prediction markets? Booming under deregulation, Kalshi. DraftKings could be gold mines if rally bets pay off. Picture this scenario. December 24th, hits, markets open half day, and boom, green across the board. Consumer confidence. Tuesday beats 92, durable goods surprise up, and Santa's sleigh lifts everything. Or jobless claims spike Wednesday, and it's red all the way. X's block-and macro warns most lose chasing it. Discipline's key. So, how to play it smart. Build curiosity into action. Diversify. Mix tech with banks. Add some gold. Set stops. Watch the rotation. Tech relief Friday, but mid-caps and real estate gaining. Success in 2026 starts now. Wrapping this up. Will the Santa Claus Rally save stocks in 2025? History says yes. Conditions scream probably, but Wall Street's secrets say beware the traps. Don't chase blindly. Think like the pros. Hit like if you're betting on Santa. Subscribe for more uncovers and drop your prediction below. Merry trading, America. May your portfolios be merry and bright.